Welcome to the Business Safari. I'm Bella, and today we're diving into the river of accounting to explore income statements. An income statement, also known as a profit and loss statement, shows a company's financial performance over a specific period of time. An income statement answers three key questions. How much money did the company make? How much did it spend? And what was left over as profit? Let's break down the main parts of an income statement. We start with revenue at the top. This is all the money a company earns from sales, such as selling its products or services. Cost of goods sold are the direct costs of producing products or services, such as raw materials. After we have subtracted cost of goods sold, we are left with our gross profit, which shows how efficient the company is at selling its goods or services. Next, we subtract various operating expenses. Operating expenses are costs like rent, salaries, and marketing. Interest expenses are costs of borrowing money, or the interest paid on loans. And taxes are what the company owes to the government. After subtracting all these expenses from the gross profit, we're left with the net profit, otherwise known as net income. This tells us how much money the company actually kept after paying all its expenses. However, if the expenses were more than the revenue the company made, it would result in a net loss. Here's a simple example so you can get an idea how it's used in practice. In this example, we will use a shoe factory. The revenue or sales of selling the product is $100,000. Cost of goods sold, or the materials used for producing the shoes, is $40,000. That leaves us with a gross profit of $60,000. Operating expenses such as salary and warehouse rent is $30,000. And interest and taxes is $10,000. So in this example, the net profit of the shoe factory would be $20,000. Simple, right? Income statements are crucial because they show how profitable a company is, where money is being spent, and how efficiently the company is operating. Remember, a healthy business should generally have a positive net profit. If expenses are higher than revenue, it's time to make some changes. And that concludes our business safari on income statements. I'm Bella, and don't forget to like and subscribe for more helpful business videos.